so far, they've announced a 2.5 million barrel per day increase in production targets. Let's ask, how much is this translated into oil exports?
Right.
The answer is 900,000 barrels per day, a fraction of that 2.5. Of that 900, 500 to 600 of it is Saudi Arabia, 200 to 300 is UAE, and then a smidgen of others. If you look at exports outside of core OPEC, they're flat to down. So what is that telling you? There's no spare production capacity in the system. I like to go back to, we're on this show a year ago, and the pundits were all talking about 6 million barrels per day of spare production capacity. Such a high level of conviction. Well, we now are finding out how much is out there, and I think the key point here, it's limited. So they're going to bring on that 137. By the way, what is 137? Take 1.65 million barrels per day, which is the latter round of production cuts. Divide that by 12, and that's where you get the 137. They're just going to keep bringing it on once every month.
So, Jeff, do you expect OPEC Plus will be going for more increases because it doesn't really matter given there's so little spare capacity?
By the way, it goes, Saudi Arabia is in the driver's seat again. They're the only ones with spare production capacity. You look at the United States, they're not drilling. They've been stagnating around 13.4 million barrels per day of shale production. Russia, flat to declining. And, over the weekend, you had Ukraine take some shots at the News pipeline. They're not increasing. So I'm going to ask you, where is this, oil coming from? And, this oil supply glut. Again, they were talking about that a year ago. And show me the oil. Where is it? Show me the spare production capacity. Where is it? I'm not going to say we're not going to get an inventory build or we're going to get a contango. But I think, what does this mean to pricing? It's a very fine line between oil supply glut and running out of spare production capacity.
But this is, I've never really seen a market with such radical views on it's tighter than believed or we're heading for a glut.
Right. But I think the tighter than you believe story is supported by the data. We're talking about this glut. You have a backwardated market. Inventories in the West are at critically low inventories. People will go, oh, well, it's going into strategic reserves in China. Yes, let me remind you, the United States did this for a decade in the 70s and the 80s. Yes, the Chinese are building strategic reserves at about 1 million barrels per day, but they have 400 billion barrels of spare capacity to keep using, and they got another 200 that they're building underground right now. That's 600 million barrels. This could go on for another 2 more years.
So you're in that camp of it's tighter than believed?
Oh, absolutely.
Full stop.
Show me the inventories. But I'm not going to completely discount inventory build as the market absorbs this production increase sometime in the next 12 months. But that doesn't mean prices are going to go down, particularly if you start to challenge the spare production capacity thesis.